Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for making time today.
Good afternoon, Devin.
Well, let's start with the Federal Reserve and the outlook on interest rates. This week we have the vice chair of the Fed, Lael Braynard, saying she thinks it'll soon be time for the Fed to back off its big rate hikes. At the same time, she says the Fed still has work to do on inflation. What do you make of her comments, Professor?
U.S. Fed Vice Chairwoman Braynard signaled the U.S. Fed is likely to increase the rate by 0.5% at its December meeting, following 4 consecutive increases of 0.75% point. She said in an interview that it probably will be appropriate soon to move to a slower paces of increases. U.S. Fed actually has lifted rates by 3.75% since March, the most rapid interval of rate rises since the early 1980s. U.S. Fed raised rate to up to 4.0% at this meeting earlier this month. But for slower base interest rate increase, there are more work to assess data and be better able to adjust the path of rates to bring inflation down. In September, Fed officials penciled in increases that could lift the rate to around 4.6% by the end of 2023. At a news conference after Fed November rate increases, U.S. Fed Chairman Jerome Powell suggested the ultimate peak level for rate has likely moved higher since officials submitted those projections. Data released last week showing a slowdown in overall inflation was reassuring the slower rate interest rate increase by U.S. Fed.
Right, and in the U.S., we see growth in producer prices slowing down again last month. That's a positive sign for stocks, but the gains in the session were tapered later on. It seems on news that the Russian-made missile had fallen on Polish territory. The Dow up a little under 0.2%, the S&P by almost 0.9%, and the Nasdaq almost 1.5%. What's the story in the global equity markets?
U.S. stocks rallied Tuesday after slowing increases in supplier prices offered more evidence that inflationary pressure could be easing. The gains were broad-based, with 9 of the S&P 500 11 sectors advanced. Stock from technology to energy to consumer staples ended the day higher. The S&P 500 rose 0.9%, and Dow Jones Industrial Average added 0.2%. The Nasdaq composite jumped 1.4% as tech stocks extended their recent run. Investors have fixated on signals about the path of inflation as they try to gauge when the Federal Reserve will moderate its aggressive campaign of interest rate increase. There was a huge rally in Chinese market yesterday due to China's new plan to ease pressure on its property market and its relaxing on COVID-19 pandemic controls. But Chinese market dropped both in Hong Kong and Shanghai by 1.2% and 0.5% respectively as of 3 p.m. in Seoul time.
Well, here in Korea, stocks rose into positive territory a few times today, but in the end closed lower. Shares of LG Energy Solution, Samsung SDI too, were back up today after a big decline earlier this week. Biopharmaceutical companies like Celltrion and Samsung Biologics with outsized declines, though. Tell us about the domestic market.
Domestic markets declined today in both KOSPI and Nasdaq. From last week, domestic equity markets are switching between positive and negative daily returns every day. Domestic investors are still concerned about the major macro risks of high inflation, rising market interest rate, bond market panic, and weakening domestic currency. In late November, Bank of Korea base interest rate hike is additional constraint to domestic equity markets. The benchmark KOSPI dropped 0.1%, and Nasdaq also retreated 0.3% today. In KOSPI market, domestic institutional investors' aggressive sales led the market downside with net sales of 210 billion won. Most of large cap stocks dropped today as market indexes decline. However, the two largest cap stocks of Samsung Electronics and LG Energy Solution rose 0.5% and 0.7% respectively. KB Holdings also rose 1% today.
And finally, Professor, Korean homeowners are looking at higher rates on their mortgages. The baseline standard for mortgage rates, called the Cost of Funds Index, or COFIX, has risen by the most on record, now just under 4%. This is calculated by averaging out the rates on deposits at Korea's main retail banks. It's 3 times higher than it was a year ago. What's behind this accelerated rise in the COFIX rate, and what do you see as its significance?
The fast rise of market interest rate will be a big burden to drag down domestic economy. The Cost of Fund Index, or COFIX, which is domestic commercial banks financing cost, approaches 4% for the first time in a decade. COFIX is used to calculate floating rate mortgage rate. It is calculated by averaging out the interest rate for deposit products at 8 banks, including KB and Shinhan banks. Mortgage rates are adjusted once the rate from the previous month is reported. COFIX rose as a result of a half percentage point increase of the base rate by Bank of Korea in November, where base rate was pushed up to 3%. The rise of COFIX outpaced the base rate increase because of intensified competition at banks to offer higher rates for deposits and savings. COFIX is projected to continue rising as the Bank of Korea is expected to raise the base rate by at least 25 basis points in late November. Along with 4% COFIX, the mortgage loan interest rate will be around 8%.
Right, and it's been evident, the competition between the banks trying to attract customers with a lot of new deposit products. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate it.
Thank you very much, Devin.